Greetings from the Charter School Office. I'm Albert Bertram, the Finance Specialist for the office. So this review of the audited financial sheet is a piece that was included in the annual report last year, and we tried to bring it to the boards via the regional board training. So this year, due to the conflicting dates with the academic section and then the finance section, we split the two up, and we are bringing the finance section to you via video. So we hope you enjoy the video over the regional board training. So this information is going to be presented directly at what your information was for your school, and this page will essentially summarize the large audit into 4 pages, and you can compare things from year to year much easier. Also, there's a couple other calculations that aren't directly from the audit, and a little bit of information included from SEPI, which I'll go over what that is and where that is on the sheet. So we'll start by diving into the sheet. Well, not diving in, but we'll start working over here. Statement of net position. So this area is this is derived directly from the audit. So to show you that, we'll look at total assets as an example. So 1,457,458. So we'll go to the audit. So here's where it says statement of net position, and then you'll see your assets here. And then here's the total assets, 1,457,458. So if you wanted to verify everything, you could come double check this right here, and that'll verify what's on the review sheet. So here's the numbers over here. Now to clarify, ending net position is the June 30th, 2014 ending net position, and the previous net position is the June 30th, 2013 ending net position. So that just lets you compare from year to year pretty easily. So as we move down the balance sheet section, here's the current assets, and these are general fund current assets, and then the general fund classifications. So I will go back to the audit to show you where that's from. So the balance sheet is 2 pages after the statement of net position, so 1, 2. Your balance sheet. Now the balance sheet shows you the other funds. Make sure you stick in the general fund column for this area of the review sheet. It is important to look at these other funds, if there is other funds, which there is in this case, and know what's going on in those funds. But for this area of the sheet, we're just looking at the general fund. So here's our current assets, and then if we scroll down, here's the fund balance classification. So there's a committed amount and unassigned. So we'll go back to the review sheet. So here's the assets again. And then over here we have our fund balance classification. So there's only 2, so I'll only go through those 2, but committed are amounts constrained to specific purposes by the board. To be reported as committed, amounts cannot be used for any other purpose unless the board takes action to remove or change the constraint. So that's what committed is. And then unassigned are amounts that are available for any purpose. These amounts are reported only in the general fund. Now you could look up these other ones. They're directly in the audit, the definitions are. So if you're interested in that, that'd probably be a quicker way. For time, I won't get into that, but those are right in the audit, the definitions. So up in the upper right hand corner, we have a little it's kind of a summary of the activity during the year. So the beginning general fund balance, the total revenues, total expenditures, if there was any other financing sources, and then the net change, and then the ending general fund balance. So from these, we do a couple calculations. Now the Charter School Office takes the management agreement into consideration when we review schools financially. So we're not as concerned with these with an NHA school as we would be with a different management type of agreement. So we take that in consideration, but it's still worth noting what these are, just for your benefit and your knowledge. So general fund divided by revenues takes the ending general fund, divides it by the total revenues, and then general fund minus restricted is essentially the same calculation, except if there was a restricted amount down here, we would subtract that first. There is not, which is why they're the same. And then general fund divided by expenditures takes the ending general fund divided by total expenditures. Now, if you looked at the last state aid status update, one of the governor's proposals looks at this metric. So this is kind of an important one to the state. We like to look at this one in the Charter School Office because usually if expenditures can be skewed easier than revenues can, now you can still skew either one of them. So an example of how expenditures can be skewed, and usually is is capital outlay. If you have a large capital outlay, that's a 1-year thing that can kind of skew your expenditures for one particular year. And revenue, it can happen if there's a large contribution of some sort, but it's usually the expenditures that gets skewed one way, or usually higher. So that's why we kind of look at both of these, and the state is looking at this one, and we look at this one. So just so you know. And then the ending general fund divided by beginning general fund takes the ending general fund divided by the beginning. Now, if this is above 100%, there's a positive net change, which this is slightly above 100%, and this is slightly positive. So that's what that is telling us. If it was below 100%, then there was a negative net change. So that should match up with that. And then we'll scroll down. So these 4 boxes summarize the notes section of the audit. So in the audit, there's a bunch of notes. I've taken many of those notes and included them in page 4 of this review sheet. We'll get there when we get down to page 4, but just so you know, these tables are meant to summarize a lot of that data. So there's notes payable is usually associated with short-term borrowing. For other schools, they borrow state aid notes from the state. That's what would usually be included here. And then long-term debt is usually associated with any financing that is not a lease for a building. So usually that would be a revenue bond or something like that for another school. The NHA model utilizes the leasing method for buildings. So that's why this leasing information is over here. This is the building lease amounts. Over here is the management fees. Now normally with a different school, a different management company model, there's an expressly stated management fee, meaning the auditor expressly says this amount was utilized or was spent on management fees. So that's not the case due to the NHA agreement. So instead of misleading or putting something here, I just put NA because there's not an expressly stated amount on there. So, and then this NA is what causes these errors down here because it's not a numeric value. So just so you know, we'll scroll down. Here's the building overview. This is the total square footage that I had on record when I looked at our charter contracts. If this has since changed, please let us know. We'll update it, and then it will just slightly alter a couple of these calculations. They're all formulas, so they'll automatically update. So over here we have revenues per square foot, and then expense per square foot. That takes the total revenues, total expenditures, and divides it by the total square footage. It breaks even because the fiscal year just about broke even. So the difference is 0, and then payment per square foot is a little bit different. It takes the lease payment up here for the year and then divides that by the total square footage, and that gives you that $15 average. Just as a point of reference, the Bay Mills Community College Charter School Office authorizes 42 schools, and the average for this payment per square foot is $14. So this is aligned pretty closely to what the average is. Over here we have operations and maintenance per square foot, which takes the line item of operations and maintenance down here, right here, and then divides that by the total square footage. That's $23. The average for Bay Mills schools, again, is $18. So that's slightly above the average, but the payment per square foot was pretty close to being on average. So just so you know. And then the square footage divided by fall 2013 just takes the total square footage and divides it by the fall 2013 count, which is the corresponding count to this fiscal year. So that's what that is. As we move down, the general fund comparison. This lets you look at the June 30th, 2014 actual, the June 30th, 2013 actual, and then the difference. So here's the revenues, expenditures. Now, if you'll notice, some of these have accounting codes, which that's what this 11X is, and some of them don't. If they were part of my original template, they'll have accounting codes. If they were out of order or I had to edit something, that's why they won't have the accounting codes. But if you don't know what any of these things are, I'll show you a quick little trick that I use to look stuff up pretty quickly. So this is the accounting manual. I copied it into Microsoft Word, and then you come up to the upper right hand corner. This is Word 2013, or you can hold Control and then push F, and that's the find feature. Then you come over to the navigation bar, type up what you're looking for. We'll use basic programs as an example. Make sure you're on results, and then you can skim through this document and find what you're looking for in this document. Now you can't do something broad like instruction because it's mentioned way too many times in this document, but if you focus your search, you can find things pretty easily. So if you want to know what basic programs are, here's the accounting code, and then basic programs are instructional activities, including enrichment designed primarily to prepare pupils for activities as citizens, family members, and workers, as contrasted with programs designed to improve or overcome physical, mental, social, and or emotional handicaps. So I won't go on reading, but if you wanted to look up these subgroups, you could do that and continue moving down to know what everything is. So that's just a quick trick to find things. If you don't know what something is, we can find it pretty quickly. So it's important to know what's on these audits and the financial statements. So we'll scroll down. So here's the ending general fund balance for the 2014-2013. Again, this should match up with the box in the upper right hand corner of page 1. Right down here we have the budgetary comparison. So this is the original budget, the final budget, and the actual. This is from the audit. And then the budget difference is the difference between the actual and the final. And then the percent change is the percent change between the actual and the final. And then over here we have this little note just stating that the original budget is due July 1, which is well before the count date. So there's sometimes a large discrepancy between the original budget and the final budget for some of our other schools. So just a reminder to myself and others in the office and to the board that the due date for the original budget is well before the count. So there's usually an amendment required. So as we scroll down, these calculations here are instruction percent of revenues, which takes the total instruction line item and then divides it by total revenue and then puts it in a percentage. So I'll scroll up for a moment. So it takes this number, divides it by this number, and then puts it in a percentage. So you'll see the trend from 3 years. It's actually trended slightly downward. The average at June 30th, 2014 for Bay Middle schools was 44%. So this is actually above that average. I'll explain a little example to state that it shouldn't be too alarming if it's slightly trending up or downward. You'll see that revenues increased and this did slightly decrease. But like I said, the percentage is still above average for our schools. But an example of something that could impact this that isn't necessarily a negative is if a teacher got resigned or fired or whatever that was getting paid $50,000 and he or she got replaced by a teacher that only got paid $30,000 starting out. That would actually lower the instruction expenditures while not necessarily providing less instruction. So I won't get into the quality argument of the seasoned teachers higher quality, but as far as financial situation is concerned, that's an example of how this number could be reduced while not necessarily providing less service. So that's just something to consider. So this is not meant to be an absolute, it's just to be meant as an indicator to ask questions and see what's going on. But this 47 is above the average of 44. So over here we have revenues divided by fall 2013. So the total revenues divided by the fall 2013 count and the total expenditures divided by fall 2013. This would be another indicator to look at from year to year to see if anything's skewed, whether it's the expenditures or the revenues, and then see how it compares from year to year. Does this increase or decrease from year to year? Then the difference, which is 0. So we'll scroll down page 3, which is the enrollment numbers. So these numbers are derived from CEPI, which before we move on, I will show you what CEPI means. CEPI stands for the Educational Performance and Information. It's a state-operated website. There are so many acronyms in education that I don't like to just use them. I like to explain what they are. And so if you come down to My School Data, you can come through a couple filters and then pick what you're looking for, whether it's student count, free and reduced lunch count, special education count. You can see all these large spreadsheets that I've gone in and dug your information out from. So that's where these are derived from. This last one, however, is a number I received via Epicenter, which Epicenter is the, if you hear that word ever thrown around, it's the program that supplies the documents and files from the school to the charter school office. So it's kind of our file exchange program that we utilize. So a document that was provided to me was the DS 4061, which is an unaudited count number, and that's what this number is. So this number is subject to change depending on what the audited number is. Just so you know, if that changes next year, next time you see this sheet or something. So over here we have a numeric display of the data from count to count. It does a percent change calculation. And then below that we have our visual display of the data for those who are visual people, and you'll see the trending from fall to spring, fall to spring, fall to spring for all the counts listed up here. This is the visual display. And then below that we have free and reduced lunch count. These are all from SEPI. And then over here, this is the percent free and reduced lunch. So this takes the total free and reduced lunch count and divides it by the total fall count and gives you a percent free and reduced lunch. And then down here is just the count data portrayed visually for our visual people once again. So you can see the trend. And then page 4, this is the notes section of this sheet, and then it's derived from the notes section of the audit. So if you'll notice the page numbers on here, these page numbers are the page numbers of the audit. So if you wanted to go look these up, you could go look them up utilizing these page numbers. So this is the little debt section, anything dealing with capital assets or leasing or anything like that. So here's the lease information associated with the building, so you could read about that if you wanted. Again, that's summarized in that box on page 1. There's 4 of them, but I believe 3 of the 4 were blank. So if you scroll down here, this is the management company information. So page 12, if you wanted to go read where this is from, but it should be word for word. And then there's no findings, which is good. Out of our 42 schools, we had 8 findings, and 4 of them were related to schools being small in scale and they didn't have proper internal controls, or segregation of duties. So pretty good. Bay Mill schools do pretty well financially in concerning audit findings. So before we finish up here, there's one last point. These BMCC notes are just any other notes that aren't related to management company or debt. So there's one thing I would like to point out. On page 15 of the audit, which I'll bring that up, it's going to be page 18. Okay, so this is page 15 of the audit, but page 18 of the PDF. So this shows a list of things that were, during the year the Academy incurred certain expenditures in the general fund which were in excess of the amounts budgeted. So this is directly from the audit. I just recreated that into your sheet down here, your review sheet. So this shows some line items that were budgeted, and then the actual exceeded the budget amount. So I'm going to pause the video for a moment and then show you why the board needs to be sure to be involved in the budgeting of all expenditures in the future. So I'll pause the video for a moment here. All right, so I'm back here. I'm going to go to the accounting manual again, and this little area here, it just talks about the Uniform Budgeting Act, and I'll just read it to you just to be clear. An administrative officer of the school district or PSA shall not which PSA stands for Public School Academy, shall not incur an expenditure against an appropriation account in excess of the amount authorized by the Board of Education. The administrative officer or an employee of the school district shall not apply or divert money to the school district, for the purposes inconsistent with those specified in the appropriations of the local school board. There's the law reference. So it's important that the school board be involved in all these budgeting situations. It's actually written in the law. So we've had a couple schools that had this issue this year. The auditor made these points specifically, and then I've shown that little snippet from the accounting manual to the couple schools that had this listed in their audit. So just important to do things in order and try to get everything straightened up. So with that, this document is reviewed by Mariah Wanick in our office, and my email is albertb@bmcc.edu if anyone has any questions. We hope you found this beneficial, and we thank you for all you do for the children of Michigan. Have a good one and stay warm. Bye.